This is the briefing from Transport Topics for March 20th. I'm Esmeralda Leon. Technology and Maintenance Council General Chairman Amanda Schuer and TT Features Editor Mike Freeze discuss recruiting highly skilled technicians and what fleets can do to retain these essential professionals in an increasingly competitive landscape. Catch the Road Signs conversation at ttn.ws/episode 159. Now let's dive into the day's top stories. Volkswagen has sold a 2.2% stake in Traton, raising approximately $393 million through an overnight placement at just under $36 per share, an 8% discount from Traton's closing price. Traton shares fell as much as 7.6% after the announcement, reducing their year-to-date gain to about 20%. The sale aligns with Volkswagen's broader cost-cutting strategy amid economic uncertainty and follows a major German spending package for infrastructure and defense. Volkswagen, which has been considering reducing its 90% Traton stake, still plans to retain at least 75% plus one share. The transaction was managed by Bank of America, Citigroup, and JP Morgan Chase. 15 oil industry executives were scheduled to meet with President Donald Trump yesterday to discuss U.S. energy policy. On the whole, executives have praised the administration for deregulation efforts, but they've also raised concerns over oil prices and trade uncertainty. Energy Secretary Chris Wright has proposed a $50 per barrel target, but industry leaders warn that price levels must be higher to sustain domestic production. Executives from ExxonMobil, Chevron, BP, and other major firms were slated for attendance, alongside administration officials, to discuss permitting reforms and American energy security. While Trump's policies have boosted investor confidence, some leaders worry about the impact of lower energy prices on production growth. The Federal Reserve kept interest rates steady at 4.25% to 4.5% during its meeting yesterday, but signaled fresh concerns over inflation and slower economic growth. The decision comes during a time of economic uncertainty driven by President Trump's tariff policies, which have weakened consumer confidence and increased inflationary pressures. The Fed lowered its 2025 GDP growth forecast to 1.7% and raised its unemployment projection to 4.4%. To address financial market volatility, the Fed will slow its balance sheet runoff starting in April, reducing the monthly cap on Treasury securities from $25 billion to $5 billion. Despite inflation risks, officials still anticipate 2 interest rate cuts later this year. That's it for today. Remember, for all the latest trucking and transportation news, go to the experts at ttnews.com.
Spoken Layer.